Trading futures, options on futures, and foreign currency involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results.
Good morning, everyone. This is another Trader Bytes. Let's start out with this morning's news. The key news overnight was the UK House of Commons voted 285 to 272 against government intervention into Syria, turning down any participation by the British into that conflict. This caused the euro to drop and oil to drop as well. Market perceiving a lower opportunity for this war to happen. The other news was Crédit Agricole came out with central bank gold buys, basically saying they cannot offset investor sales, and they think the average price of gold is going to drop to $13.15 per ounce this year and $1,000 per ounce next year. Also, analysts at Citi note that hedge funds are mostly short German and French government bonds, while central banks have corresponding long positions. That's the key overnight news. The numbers came out this morning. We had several releases, namely personal spending, personal income. Personal income came in lower than expected. Personal spending came in lower than expected, 0.1% versus 0.3%. And then the U.S. PCE deflator came in at 0.1 versus 0.2. In addition to that, we have some comments from Fed Lacker. He's a hawk. He's a non-voting FOMC member, and he says he opposes any QE intervention and favors reducing MBS buying first in any QE tapering. The daily calendar shows that we've pretty much gone through the PCE numbers. Looks like Milwaukee came out, expected 53, and then the actual is 48.21. That's Milwaukee NAPM or ISM. The big number we're expecting today is Chicago PMI. That's supposed to come out at 8:45 Central. It generally comes out a few minutes early to subscribers, 8:42 or so. I would be cautious. The expected number is 53, or the consensus is 53. Following that, at 8:55, University of Michigan Confidence. This is a final number. It's not as important as the prelim. The expectation there is 80.5. Again, that's at 8:55 Central. And then the rest of the calendar, the rest of the day's calendar is pretty empty. U.S. Equity Weekly Index at 9:30. And then at noon, the Baker Hughes U.S. rig count. We don't really pay attention to those numbers. As far as speakers, we have Fed's Bullard coming in. Unknown time at the moment. He's speaking on the economy at various locations. This is a voter and a dove. And then, of course, German Chancellor Merkel continues to campaign for re-election. That's it for the news. Looking at the technical picture, let's go to the day session only. So when we look at the big picture here, what have we done? Essentially, the market's been rallying for a while on some pretty narrow or short-lived pullbacks. Last major pullback is in June. We pushed to new highs. We have multiple tops at 1705. I see those as weak highs. You can see the volume dropping off very quickly up here. And then the market was balancing, and the expectation was for the market to balance, push lower towards the 70-72 area, then turn back around and push to highs. And push to highs again to take care of these weak highs. However, since then there's just been a lot of fundamental based news, some issues, the key one being, of course, this chemical weapons issue in Syria, with the US rhetoric and propaganda to intervene and so forth, which caused oil to spike up and equities to drop. So we we dropped for a while, turned, made higher highs, higher lows. The market was one time framing upwards. It looked like it was heading for the 69.50 gap, and then we have a gap zone at 78.75 to 69.50. It looked like we were going to go into that before this news came out on Monday night. And on Tuesday we gapped down, left a huge gap zone above, and we've been in balance here for the last couple of days, with the market finding a low at 24.75 and starting to turn up. 50% of this move from the Monday high to the Wednesday low is 46.25. Watching that, that's in the gap zone. And then looking at a more short-term view, this is a 15-minute day only. This chart shows the balance and non-balance zones pretty clearly. You could see the last balance zone was right here with an MCV block at 55.25. MC stands for microcomposite. It's this profile here drawn over a balance period, and 55.50 is the target upwards for today, although we're trading 39.50 at the moment, and that seems a little bit out of range, but I think it's still possible. And you can see here since Tuesday we've been balancing down here, so it's time to draw a profile around that. There we go. And looks like 37.50 is the key number in this area. That's the most accepted price in this zone. But it's making a healthy push upwards. We have a double top at 44.75 or so. I think the market's definitely ready to seek higher. However, when you look at the overnight picture, waiting for the charts to pop open here. So we have, here's the sell-off day following the gap down, and then an attempt lower, fails below Tuesday's low, and then the market rallies back up and then finishes right at the mid on Wednesday. Yesterday, again, it starts lower, pushes right up into value, tests the other side of value, pokes around for a little bit, and then pushes through Tuesday's or Wednesday's high, and then pushes through Tuesday's high as well by just 2 ticks before it weakens and just trades sideways into the close. I think the market's still intermediate term bearish on these gaps, on these moves down, but short term it's trying to find, it's finding some support and it's finding some value higher. So I'm keeping an eye on that. Now when we look at the overnight picture though, when I switch to 24 hours, you can see that it basically started out sideways, rally, took out the high by a tick, and an immediate selling. And what you have here is a head and shoulders formation with the right shoulder at 41.25, neckline right at the IB. So this looks an awful lot like the open is going to invite some selling. It's having a hard time maintaining higher prices. And the profile looks very, very weak at the low. So on the open, the expectation is, since we're opening right at the closing price of yesterday, so there isn't any gap to fill, the closing price is at 36.75. The open's around 39, so there isn't much difference there. And it's opening in value against the point of control. I think it's going to try to seek lower at the open. That's my opinion. It's not a trade recommendation. Trade your plan. And then, but past that, I think, depending on how far we reach below, remember yesterday's opening swing high is 31. Depending on how far we reach down, I think it'll probably trade sideways for the day. I expect an inside day unless there's news on this Syria issue. And that's really it for the S&Ps. The upwards targets, initial upward target, remember this is a gap zone here from 44.25 to 53.25. The initial upside target's 48.75, and then recall that the prior VPOC's at 55.50 up here, and then of course that coincides with the CLVN up here. And then any tests lower, we're looking at a challenge of the prior low 27.75, or actually 24.75, and then a gradual climb into the next gap zone below, which starts at 22, major target 19, and then second target 15.50, which is the CLVN and the middle of that gap. That's it for the S&Ps. The Euro's been in a funk. It is climbing. It is looking pretty strong. It's putting in balance, then higher, balance, then higher, balance, a little bit higher, and then here it's finding balance lower. In fact, I can extend this profile across. And it's been balancing higher, but it's breaking lower. It looks like it's aiming for 131.50, and then of course you might recall from the last 4 or 5 weeks, the key number in this area is 130.90. That is the comfort zone for the euro, and it looks like it's heading back there. That's it for this morning's run. Remember, mind your risk. And this is not suitable for everyone, but watch your risk and let the upside roll. Take it easy.